You were listening to chartingwealth.com for Wednesday, the 1st of August, 2018. Our book, Charting Your Way to Wealth, is what you need to get started understanding what it is we teach here at the channel. It'll make a lot more sense of all the trainings and the daily podcast. We do keep it as simple as possible. We talk about Occam's razor in the book. We have multiple chapters dealing with everything from mindset to emotions to keeping it simple and straightforward, time frames, candlesticks for visualizing price movement, particularly the candlesticks that we use, which are the Heikin Ashi candlesticks. We go into trend lines, the price percent oscillator, which of course is our major oscillator, making use of the minor indicators, and the two primary methods that we use for successful charting as well as buying and selling. And our last chapter, pulling it all together. So if you don't already have our book, please go ahead, follow the links, and order it. You can find links at our daily market review. Hopefully you're a subscriber. If you're not, it's easy to become one. Just go to chartingwealth.com and sign up. That also will get you every quarter the special training that we do. In fact, we're about to re-release the quarterly training that we did recently so that the folks who have actually purchased the book can see it again. Now, the quarterly training that we do is really, really important. This quarterly chart on the S&P 500 is amazing. Going back 20 years or more, you can see how it would get you into and out of the market at just the right times. We talk about the Trump effect, the last quarterly crossover going up and how the charts are performing, things you need to be concerned and worried about. We're going to re-release that on the 7th of August. So if you haven't ordered your book, you need to go ahead and reorder if you want to get that special training and you are interested particularly in how these long-term charts actually work. So we would like to send that information to you, and in order to get it, all you got to do is buy the book. And again, if you're a subscriber, we put that out to you once a quarter, and to become a subscriber, that's absolutely free. You'll have to wait till the next quarter to get this latest one, though. We've already put that out and are not re-releasing it. We also have another special training coming up for book purchasers. That's going to be our Bitcoin chart. Going to give you a free copy of that, a link to it, as well as our Bitcoin training. We have a great Bitcoin chart that actually uses a different indicator, but we found that it works very well for helping you to track Bitcoin. And we use the New York Stock Exchange listing on that. So again, it helps us track it. We can find it on our charts. We find it to be very helpful. Okay, enough of all that. That does help keep our channel going. That's how we're able to come to you free every day. Let's jump into the markets. Everything up for the day. Remember yesterday, everything was down. Well, today, everything is up. Now, as we look at the weekly candle on the S&P 500, we can see as far as our Heikin Ashi candlesticks, our average pace, it's fallen way off, has it not? In fact, we don't have a green up candle. We have a red open box. Now, that's not a strong down candle, but again, it shows a pullback. Price is blown through the two-day trend line as well as the weekly. Derivative oscillator, however, is still gaining upward momentum. Price percent oscillator is just about flat, still ticking up some. Now, again, we're just 2 days into a 5-day candle. The 2-day candle did finish drawing, and it is a red down candle. Got a little bit of a wick on top, but it was preceded by a red open box candle. We see the derivative oscillator peaked out back on the 2-day candle ending the 25th of July. It's continued to move down. The price percent oscillator now is heading down, not at a steep pace, but it is moving down that 4-hour chart. What do we see, though, throughout the course of the day? We saw a green spinning top in the morning, meaning indecision tending up, and a green up candle in the afternoon. Derivative oscillator, because of 3 prior strong down candles on that 4-hour chart pushing through the 2-day trend line, that momentum, that oscillation has continued to play out in the derivative oscillator, and the price percent oscillator still heading down also. Now again, S&P 500 up 0.49% just for the day. So let's keep our eye on things. couple of things we need to keep in mind is that 2-day chart is still in a confirmed up move, and that weekly chart is still in a confirmed up move. What happens if this 4-hour movement continues and we see a crossover going up? You got it. You get into an up move if that occurs. Remember, we're trend followers and the trend still is up. So keep your eye on things. It may not happen. It may blast down again over the rest of the week. But if things do start trending up on the S&P, be ready to jump in and ride that wave if that wave continues. We do see some signs of it faltering. But that also happened with some strong down moves on the 2 weeks ending the 22nd and the 29th of June. And then through the month of July, the market went up. So watch, listen, wait, see, plan, make intelligent moves. Okay, the Qs. Now remember, the Qs had really been being hammered. That's the NASDAQ 100. It was up almost twice what the S&P 500 was up for the day. The NASDAQ 100 up 0.77%. Now we still have a red down candle for the week. We're looking at the weekly right now, just 2 days in, but it is a solid red down candle, having been preceded by a red open box candle. Now, it's not the same chart as the S&P. We see the derivative oscillator losing momentum. Looks like the price percent oscillator is trying to cross over going down. Can't call that, of course, till the candle's drawn at the end of the week. 2-day chart, however, has finished drawing. It is crossed over going down. So any up move until that 2-day pulls back and heads in the same direction would not be sensible and would not follow our rules. So we're going to go ahead and redraw that. We do have the derivative oscillator losing momentum, price percent oscillator heading down. And on the 4-hour chart, what do we see? Again, some sideways sliding, a little bit of up movement, mostly a sideways slide. So we don't have a trade at this time on the Qs, and the likelihood of that happening soon because of the divergence we have between the 2-day and the weekly. Not likely. Let's keep moving through these charts quickly but efficiently. We see TLT 20-year bonds up 0.55% for the day. However, weekly candle still moving down quite strong. Derivative oscillator losing momentum. Price percent oscillator heading down. 2-day chart, of course, it crossed over going down back on the 23rd. Still heading down. We'll redraw that a little bit. Try to reset that accurately for us. But again, price movement is below the 2-day. Remember, the weekly is still confirmed up, but that 2-day is moving down. So we don't have a trade on TLT. We did have a crossover in the morning going up, but again, price movement still below the 2-day trend line. So we'll have to wait and see. Remember, our rule is the weekly and the 2-day have to be moving in the same direction. Just our rules. Why don't we use them? Because they work. Okay, GLD, that's gold. Gold still in a confirmed down move on the weekly. We have had many weeks of down movement with only 3 weeks in all that time period since what? The 15th, let me see, where did the strong move started there in April, around April the 27th, the week ending April the 27th. And since that time, all the way through June and July, and now into August, only 3 up weeks that entire time. And again, strong down movement. Derivative oscillator, however, has finally stopped gaining downward momentum so far this week. And as we go from the weekly to the 2-day, what do we see? We see that price percent oscillator heading up and the derivative oscillator losing downward momentum. And again, we're seeing price movement sliding sideways and again, still down, but it really hit its bottom all the way back on Thursday the 19th on that 2-day chart. So we'll just keep our eyes on things, still confirmed down, but if we have a crossover going up, of course, that's something we want to pay attention to. What do we see on that 4-hour chart? Well, it's continuing to, the derivative oscillator has started gaining some momentum. Price percent oscillator is heading up. And of course, we had down movement in the morning, but then up movement in the afternoon, pushing through the 2-day trend line. So just keep your eye on things. Again, if things rotate over strong going down in gold, before we have a crossover going up on that 2-day chart. If that happens on the 4-hour going down, then of course it might give you another chance to jump into a successful inverse trade like we saw happen back around the 13th when we had that move, strong move down in gold. That's where we are, folks, as we end the day on Tuesday, go into the first day of the new month, as we close the day on Tuesday and go into the new month on Wednesday, the 1st of August. Thank you so much, my friends. God bless from the whole team here at Charting Wealth World Headquarters.